Welcome to today's Canary report on June 14th, 2026. Markets are cautiously optimistic as investors digest a mix of geopolitical relief and lingering Fed uncertainty. The broad rally across all major indices suggests confidence is building, but we're watching for any cracks in this optimism. Let's see what our canaries are telling us. The speculative sentiment today shows a measured appetite, with SPHB leading the pack at plus 1.18%, and XBI showing solid gains of 0.67%. RKK sat essentially flat at 0.04%, which tells me speculative capital isn't rushing in recklessly. They're selective about where they deploy risk money. This selective aggression makes sense given the news backdrop. SpaceX's strong debut and broader tech optimism are drawing attention. But investors are still calibrating exposure after that sharp Fed-driven tech sell-off mentioned in the headlines. The greed meter reads as cautiously engaged rather than euphoric. Credit conditions tightened marginally across the board. All three yield instruments posted small gains between 0.14% and 0.19%. This isn't alarming. It's more of a confirmation that the market is pricing in slightly tighter financing, likely tied to those Fed policy concerns showing up repeatedly in today's news cycle. High HYG and HYGW all moved in lockstep, suggesting institutional credit buyers are rotating carefully rather than fleeing or flooding the market. The pulse is steady, if not quite as smooth as we'd like it to be. Fear is clearly cooling off. UVXY dropped 0.65%, VIXY shed 4.1%, and VX gave up 3.89%. This aligns perfectly with the VIX's massive 9.05% decline to 17.68, telling us volatility expectations are resetting lower. The fear gauge reads as dampened rather than dormant. There's still awareness of risks, but today's US-Iran peace signals and SpaceX momentum provided enough relief to ease investor nerves. It's like someone turned down the volume on anxiety while keeping the lights on. The real economy engine is running stronger today, with SMH posting 1.09% gains and KRE leading small-cap industrials at plus 1.27%. IWM and RSP both climbed as well, suggesting the broader production and manufacturing backdrop is holding up despite Fed chatter. This is consistent with what we're seeing in the headlines. SpaceX's debut and sector-specific momentum are providing tailwinds that outweigh the Fed policy drag. The engine sounds healthy, but not roaring. It's steady output rather than explosive performance. Safety saw a mixed day, which tells an interesting story about capital rotation. Bond, GLD, TLT, and XLP mostly retreated, down 0.1% to 0.88%, but gold surprisingly gained 1.55%. This divergence suggests investors are still holding some defensive positions but aren't in full retreat mode. The consumer staples strength, XLP plus 0.88, indicates rotation into essential goods, which fits with the near-term peace narrative reducing supply chain concerns. It's a safety trade that's selective rather than panicked, a flight to quality without the flight to cash. Today paints a picture of markets digesting geopolitical relief while remaining mindful of Fed policy risks. The broad index gains across S&P, Nasdaq, and Dow reflect confidence in near-term stability, particularly with those US-Iran peace signals providing tangible optimism. Credit conditions are tightening marginally, but not alarmingly. Fear is cooling off in sync with reduced volatility expectations, and the real economy engine remains functional despite headlines about Fed-driven tech weakness. The canaries aren't singing a lullaby or an alarm. They're humming a steady note that says, cautious confidence. That's your Canary report for today. With geopolitical tensions easing and market breadth showing healthy participation, I'm watching to see if this optimism holds through earnings season and the next Fed move. Stay vigilant about those sector rotations and keep an eye on how the peace signals actually translate to sustained momentum rather than one-day relief. We'll see you tomorrow.